Welcome everybody and welcome to this session on scope of supply under GST. Let me begin with a simple question. Does every transaction involving money attract GST? The answer is no. Before checking the GST rate, before calculating GST tax, even before discussing input tax credit, we must first determine whether the transaction is a supply. Under the earlier indirect tax system, we had different taxes. Manufacture was important for excise duty. Sale was important for levy of value added tax. And the provision of service was important for levy of service tax. But GST brought these different concepts under one broad expression, and that is GST. Specifically, supply under Section 7 of the CGST Act. So therefore, supply is the gateway to GST. So in this video, we will understand how Section 7, Schedule 1, Schedule 2, and Schedule 3 of the CGST Act work together. So by the end, you should be able to look at a transaction and ask, is it a supply? What type of a supply is it? Or is it outside GST altogether? So let us begin with the structure of Section 7 of the CGST Act. Now look at the four parts shown on the screen. Instead of trying to mention Section 7 line by line, let us understand it as a four-stage GST test. So the question is, does a transaction fall within the general meaning of supply? That takes us to Section 7, subsection 1. Then what is the next question? What if there is no consideration? Normally, we may think that no payment means no GST. That is true. But Schedule 1 contains an important exception to this general rule. Now the third question, if it is a supply, is it a supply of goods or supply of service? To answer this, we use 7 subsection 1 capital A and Schedule 2. And finally, does Schedule 3 exclude the activity altogether? So these are the 4 GST tests. So the simple route is, first identify the supply, second check the special cases, then classify it and check the exclusions in Schedule 3. So keep this 4-step map in your mind as we move through the remaining slides. Let us now come to the heart of the concept of supply. Look at the activities displayed around the center. Sale, transfer, barter, exchange, license, rental, lease, and disposal. So these are common forms of supply through which the transaction may take place. Here is an important question. If every sale automatically is supply under GST, not necessarily. Under the general rule, two important conditions normally have to be satisfied. First, is there a condition? In simple terms, has something been received in return, either money, goods, service, or another benefit? And secondly, is the activity connected with your business? So, to understand this, let us take a simple example. Suppose a furniture dealer sells office furniture to a customer. There is consideration and the transaction is clearly connected with the business. Therefore, it is a supply within the scope of Section 7. Now consider another situation. A person sells an old car which he has been used at home, or a furniture set. The person receives money, but is the transaction in the course of furtherance or in the course of business? Normally, no, because he has sold the sofa which he has used at his home. So, this has not been used in the course of his business. Therefore, consideration alone doesn't automatically make every transaction a supply under Section 7(1) Clause A. So, remember, consideration plus business connection, this is a normal supply test. That is very important. So, what happens in special cases? Let us see. So, this slide deals with the two special cases. First, look at the left side. Section 7, subsection 1, clause AA deals with specified transactions between an entity and its members or constituents when consideration is involved. The law may treat the entity and its members as a separate persons for this purpose, distinct persons for this purpose. Now move to the right side. Suppose a person in India receives a service from a supplier located outside India. So the question arises here is, does the service have to be connected with the business? As you know, this is a clear example of import. So for an import of service made for consideration under Section 7, subsection 1, clause B, as shown in the right side, the business purpose requirement doesn't apply in the same way as it does under the general rule. For example, a person may obtain professional design or a consultancy service from an overseas service provided for personal use in India. Therefore, do not automatically apply the ordinary business test to every import of service. So then what is the key takeaway? Section 7 contains special rules and each transaction must be examined under the correct provision. Now let us move to an even more important exception, supply made without consideration. Here is a question that frequently arises in GST practice. If no money is paid, can GST still apply? The answer is yes. Condition is if the transaction falls under Schedule 1. Then what does Schedule 1 contain? Schedule 1 contains specified transactions that are treated as supplies even made without consideration. So let us look at the 4 categories shown in the slide. The first concerns the permanent transfer or disposal of certain business assets where input tax credit has already been availed subject to statutory conditions. The second is particularly important in practice, real life practice. That is supplies between related persons or distinct persons in the course or furtherance of business. For example, imagine that a company transfers its stock from its Kerala GST registration to its Tamil Nadu GST registration. No customer may be involved, no sale consideration may be charged, but the GST registrations are treated as two distinct persons for the levy of GST. Therefore, the transaction may still be treated as a supply. Then the third category. The third category concerns specified principal agent transaction. Principal agent transactions. An agent is appointed by a principal to do some kind of business on behalf of the principal. Now the fourth category, it concerns certain imports of services from a related person or an establishment outside India for business purposes. So what do you learn from this? Whenever you hear there was no payment, so there cannot be GST. Remember always to ask, have you checked Schedule 1? That one question can prevent a major GST error. There lies the importance of Schedule 1. Assume that we have already calculated that a transaction is a supply, or concluded that a transaction is a supply. Now we have another important question. Is it a supply of goods or a supply of service? Because GST is a tax on supply of goods or service or both. So the important question is it a supply of goods or a supply of service? This is where Schedule 2 becomes very much relevant. Let us see a simple example. Suppose a company sells a machine and transfers ownership to the buyer. The title in the machine is also transferred. Therefore, it is genuinely treated as a supply of goods. Now you change the scenario. Suppose that in the same transaction, suppose the company doesn't transfer the ownership. Instead, it allows another person to use the machine for a period in return for a payment, like hypothecation or something like installment sale, something. This may be treated as supply of service. So similarly, renting of immobile property and a works contract are treated as supply of service under the relevant provisions. Now remember one important legal point. Schedule 2 doesn't first create the supply. We must first establish that a supply exists under Section 7, subsection 1. Only after that we use Schedule 2 to answer. So Schedule 2 is only ancillary to our establishing that a transaction is a supply. So only after that we use Schedule 2 to answer the question, is it supply of goods or service? So this classification may affect the GST rate, place of supply, time of supply, and other GST consequences. Now we come to Schedule 3. This is an important exclusion stage. So let me ask you one question. Can an activity exist but still remain outside the scope of supply under GST? Yes. Sounds funny. Schedule 3 lists certain activities that are treated as neither a supply of goods nor a supply of service. So look at the first example. An employee working for an employer under an employment contract and receives salary. When the service is provided in the course of employment, it falls within Schedule 3. Therefore, employer-employee relationship is very, very important. Likewise, other entries include specified functions performed by constitutional office holders, services by courts and tribunals, funeral service, burial service, service of a crematorium, mortuary services, etc. The sale of land is also included here. That means sale of land doesn't attract GST. Another funny example. Look at the sale of building example, completed building. So, sale of completed building once completion certificate has been issued is included in Schedule 3. What is the impact? There will be no GST because it is treated neither as supply of goods nor as supply of service. Therefore, before calculating GST, always ask, does Schedule 3 remove this activity from the scope of supply? Or rather check Schedule 3 for list content. If a list contains certain activities, then the normal supply analysis stops there. It is neither supply nor supply of service. We have now studied the legal provisions. Then how do we apply them in real life? Let us test a few situations. First, a company sells all the machinery used in its business. Is there a transaction? Yes. Is there consideration? Still yes. Is it connected with the business? Yes. Therefore, it is generally a supply within the scope of Section 7. Second, the head office transfers goods free of cost to a branch registered in another state, say Tamil Nadu, from Kerala to Tamil Nadu. As you know, there may be no consideration. But should we stop there? No. We must check Schedule 1. And thirdly, a building is rented for commercial use. There is consideration and the transaction is connected with the business as well. Therefore, it is generally what? A supply of goods or service. It is supply of service. Fourthly, salary is paid to an employee. Even though there is payment and an activity, Schedule 3 may apply because the service is provided in the course of employee by the employee to the employer. And finally, a completed flat. It is sold after satisfying the relevant statutory condition. That is, completion certificate has been issued. Schedule 3 may exclude the transaction from the scope of supply. This is why I say GST analysis should never begin with the tax rate. What to do first? First, apply the supply test as we discussed here. Now, let us look at some common situations where GST analysis can become very difficult. First, free gifts and samples. So does the absence of consideration automatically mean that there is no GST implications? Because in free gifts and samples means there is no consideration. So does the absence of consideration automatically mean that there is no GST implication? Not always. We must examine the facts and check whether any provision, including Schedule 1, applies. Second, reimbursements. A reimbursement is not automatically outside GST. In this case, we must examine the nature of the underlying transaction and determine whether the amount is merely a pure reimbursement or a form part of any consideration in connection with a transaction. And thirdly, transaction with the related persons. Even where payment is absent, Schedule 1 may become relevant if the statutory conditions are satisfied. And fourthly, transaction within a partnership arrangement. We must examine the true nature of the arrangement. A genuine proprietorship and a transaction between separate taxable persons may have different consequences. So the practical lesson is very, very simple. Do not decide GST liability merely by looking at the label used by the parties. You have to look at the actual facts and circumstances. Always ask, what happened? Why did it happen? Was there consideration? Was it connected with the business? Does any schedule apply, whether 1, 2, or 3? So, a good GST analysis begins with correct facts and ends with correct classifications. Let us now connect the entire concept. Whenever you face a transaction, follow a sequence. First, identify the activity or transaction. Second, apply Section 7 test. In this, ask whether the transaction falls within the scope of supply. Thirdly, if necessary, check Schedule 1 for supplies without consideration. Fourthly, if supply exists, use Schedule 2 to determine whether it is goods or service. And fifthly, check Schedule 3 to see whether the activity is excluded from the scope of supply. So these chronological tests are very important. Sequential tests are very important, because only after completing these steps should we move to tax rate, then valuation, place of supply, time of supply, and a claim of ITC, etc., etc. So there is a logical flow. Always remember, GST is not only about the rates and returns. It begins with one foundational question: what is a supply? If we identify the supply correctly, classification becomes easier, compliance becomes more accurate, and the disputes can often be avoided practically. So thank you for watching. If you found this session very useful, please like, share, and subscribe for more practical and simplified GST lessons. Thank you.